Should we buy or sell this real estate ETF? So first off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So here are a bunch of real estate sector ETFs, and we will look at this one, Premium Yield REITs. So we are 5% here from the 52-week low, but minus 14% away from the highs. On average, these ETFs are in a bear market, minus 24% away from the 52-week highs. So here we have the ETF weekly data points. So this is no big picture. So the interesting thing at the moment is that there is this very important moving average, in play, and that is this one, blue 100-week moving average. As you can see, in 2013, 2014, and also 2015, it was very good for the bulls, but it then became a resistance, clear resistance. So the bears started to make good money shorting that moving average. And here you can see, a very good resistance level, a spectacular place to put on short positions. But there's been a bit of a change now, because what was resistance has potentially become support. So given that this moving average has, a track record of being a very big deal for this ETF, this is interesting. The problem for the bulls is that we have tested it for support 1, 2, 3, 4, 5 weeks now without getting a rally. If you look at some of the prior tests here, we do goof around a bit, but this was 3 weeks. Here, only really 1 week, well, 2 week-ish, but the bulls are kind of wasting time here, but I think we can give them the benefit of the doubt. The problem for the bulls is that there's a very good bear level right above us, and that is the red 200-week moving average. Very good place to put on short positions recently. Looking at the daily data points, this ETF is a bit messy, because we can see that there's a pretty substantial rounding top pattern. That is, for all intents and purposes, a bearish technical pattern, but a rounding top is formed through pullbacks, rallies, pullback, rally, pullback, rally. So you can, because of that, have new rallies, even though the overall big picture pattern is bearish. Here we have the other indicators. Accumulation distribution is definitively very bullish, but that's not reflected in price itself. Looking at RSI and PPOs, we are in zones that has a bit of a tendency to be bought by the bulls, but this is not like screaming buy zones. Looking at the dailies, accumulation distribution is holding up REITably well. A bit of a sell signal here on MACD. That is a bit unfortunate. RSI is in a zone that has a bit of a tendency to be bought, but not like very high probability of being bought. So I think that the key thing here is 100 weekly moving average support. That is the line in the sand. I think I will give the bulls. I think I will give them. I give them only a 2. The reason why they only get the 2 is because we have tested that moving average now quite a few times. It is holding as support, but we need more. We can't simply just test the moving average. We need to actually go up. So let's look at seasonality. So to the right here, we get the average data over the last 5 years in green, 7 years in blue, and 10 years in red. Over the last 5 and 7 years, the seasonality is very good. As a matter of fact, the beginning of next week is a very good time from a seasonality perspective, and it gets better leading up until late July. Looking to the left here, over the last 5 years, June, the current month, is it is the strongest month. That is bullish, of course. And looking at the last 10 years, June is overall it is the strongest month, and the July is also decent. The last 13 years, then we do see that June is one of the strongest months, and July is also not too shabby either. So given that, the current month is one of the strongest months for this ETF, I think I will, I think I will give the bulls a 5. This is pretty darn good seasonality. So let's compare the premium yield equity REIT ETF with the VNQ, which is the Vanguard real estate ETF. Let's just jump into performance. So year to date, premium yield is beating Vanguard by significant percentages. Looking at price earnings is much better. 9 versus 40 here. The yield is also much better, 5.5% versus 3% for the VNQ. That is a substantial difference. Here you can see the holdings, 29 versus 164. So here you have a bunch of healthcare REITs. You can see Care Trust REIT. Very interesting REITs, frankly. Some of these REITs are at least they all have long-term prospects that are pretty good. So yeah. So I do think that this one is pretty firmly in the bull camp. I think I will give the bulls a 4 here on the fundamentals. This looks good. Good yield. Interesting REITs, and interesting price earnings as well. So yeah. Now let's look at some correlations. So we do have long-term -5 with the S&P 500, 76% positive with REIT, and that is the global real estate ETF. Then 47% with IER, that is the US real estate generic ETF. And then you have 23% with the dollar index. Short term, we have 69% with S&P 500, 78% with global real estate, and 72% with US real estate, and -57% with the dollar index. So looking short and long term, the premium yield REIT ETF is most correlated with the global REIT ETF. So let's look at REIT, starting here with weekly data points. So this one, it has fallen back to a horizontal level that could offer some support. Looking more big picture, you could argue that there is the potentiality of forming a major inverse head and shoulders pattern. It's a possibility. Looking here at weekly RSI and also PPO, we have fallen down to a rare low level. So that's interesting. It could be at least be a setup for some bounce. Looking at the daily data points here as well, we see that usually this low level is bought. But there's no guarantee, because during panics we have seen even lower RSI and PPO levels. So here I am comparing the premium yield REIT ETF with the global REIT ETF. In this case, we are seeing something that looks like, on the one hand, we do have a rounding-ish bottom pattern that is bullish. Beyond that, we also have something that looks a lot like, let me draw it in. This looks very much like a breakout in development. When we look here at RSI, we are high, but we have been higher in the past, like during this rally here and here as well. So the bulls have an opportunity now to have follow through with this breakout. So this is an interesting setup. If, as an example, the RSI was at these levels, these tops back here and here, then I would be far more, a bit more pessimistic, because but this current situation is interesting. So let's look a bit here at the seasonality, like that. So over the last 5 years, we do see that premium yield, it usually underperforms global real estate, leading into the 8th-ish of July. Yeah. Okay. So there's that, and now let's compare REIT with, let's actually take REIT, because it's a global REIT ETF, so it makes sense to compare it against the global stock market ETF. So in this case, the first pattern that jumps at me is that it does have a bit of a tendency to form these rounding bottoms that don't really play themselves out. So here we have a rounding bottom in development, but as you can see, it didn't really work. So yeah, so this one is just a bit messy, really, because I mean, we have seen some selling recently here. Quite a few weeks in the row, global REIT has underperformed the WT. But let's look a bit at seasonality. Maybe that will be that final arbiter. So looking at seasonality, we do see that REIT, it actually tends to outperform the global stock market ETF, leading here into 11-ish of July. So that is bullish. So I give this one a 2 on relative performance. Some interesting things in development, but not like screaming bullish findings. But overall, we do end up with a 3.3. So the data we do have is more favorable of bullish than bearish trades. The key line in the descent is definitively this 100 weekly moving average support level. That is like the key super important level, because given the data we have found here, we expect the bulls to utilize this level if they are not able to protect the 100 weekly moving average. And if that one becomes resistance, when we looked back in history with this ETF, getting below that level, it really is attractive to the bears. So yeah, it is super important that the bulls buy this level coming into the next week. I see we have some time left, so let's just quickly do a bit of an analysis here of the S&P 500. Yeah, so you can see here that the SPY, it has a massive rounding top pattern. We have lost all kinds of moving averages, but we do have something a bit horizontal supportish here that could work out. Also looking at the RSIs and the PPOs, we are still rather low. Yeah, looking at the daily data points. Yeah. Let's quickly look a bit at the seasonality here for the S&P 500. So you can see here that from a seasonality perspective, here with the SPY, the beginning of next week, frankly, 13th of June, it usually is a temporary seasonal low for the S&P 500. Across the last 5, 7, and 10 years. So that's interesting. It's something at least to have on our radar. I do think that we most likely are in the process of moving into a full-blown recession. But even during the most vicious bear markets, there are rallies within. So it makes a lot of sense to have a bit of a market neutral portfolio, because to be like 100% bearish, that is very risky. Just like it is very risky to be 100% bullish during a bull market, because then when you have like the C19 lockdown, then all of a sudden you will have a lot of nightmares. Okay, whatever you do, of course, you want to use stops and go to diamondarm.com to get access to a bunch of other stuff.